Is buying a car a tax write-off? We are going to get so creative about this. You're going to love it. I can tell you as an employee, you cannot write off your car. As an entrepreneur, which means you need a reason to generate money, and what's that reason that you're going to actually have a business, you will be able to do all sorts of creative things. I'm bringing Scott Arden, my partner at Generational Wealth Solutions. So go check out our website for a strategy session at generationalwealthsystems.com. And I'm going to interview Scott in detail about not only this car write-off, but more creative corporate strategies around it. So the three things we're going to specifically interview and talk about are how to determine if your car qualifies for a write-off. There's a very specific kind of vehicle and the weight of the vehicle. Number two, what are the best practices to ensure you're getting the maximum write-off? And one thing we're going to bring up in this is your officer and director benefits. That's where you win big, but you've got to, again, be an employee of a company that you own. And then last are the misconceptions and mistakes that tons of people make. It's shocking. So Scott, welcome to our interview. So Scott, welcome back. I'm here with my partner, Scott, and we own generationalwealthsystems.com, and we help you set up your entities, your corporate structure, and your trust for generational wealth. And there'll be some fun gifts we're going to give you at the end of our video, but let's jump into this conversation of, is buying a car a tax write-off? If you're just an employee, we're going to tell you no, but talk about how to determine if the car purchase qualifies when you own a company.
Yeah, so how the car purchase qualifies if you own a company, there are the Section 179 depreciation schedule, the advanced depreciation schedule that you can take on purchasing a vehicle through a business. Now, it does have to meet certain guidelines of gross vehicle weight, things of that nature, which is why a lot of the people you'll see go buy the G-Wagons or those really big SUVs to be able to take advantage of those tax write-offs. So, yeah, I mean, it does allow for that depreciation, plus any of the expenses incurred, any maintenance costs, fuel, things of that nature become now a tax deduction to the business. Whereas, again, if it's just us as individuals, we don't get to take advantage of that. So, yeah, buying a vehicle through a business it can definitely be beneficial for tax purposes, but there are some other things that you need to consider when doing so.
So let's go into that and talk about the best practices for ensuring the maximum tax benefits, also protection, because I know you're not a fan. We're both not fans of putting it in a core operating company, putting it in a different company. So talk about first, just the best practices, and then how that structure really could be the most efficient for those listening.
Yeah, absolutely. So again, we don't really want to put the vehicle into your operating business or your cash machine, because if that vehicle gets into an accident, yes, there is insurance on the vehicle. But again, it's the first line of defense. And then if that liability issue spills over, it's going to spill over to now your cash machine or your corporate structure. So what we like to consider doing is, if you want to take advantage of those write-offs, is creating a separate company, a company that's going to own the vehicle and lease it back to your operating business. That way it separates out the liability aspect, that if their vehicle does get into an accident, it's contained within that one LLC.
So Scott, talk about those who are living in sole proprietor land and how that's just, number one, not even good. And so where's the vehicle in that? So I'll just tell you the answer is we don't want you in sole proprietor land, so why not? And then right, well, what the cars would be doing, because it's again, you're not taking advantage of everything that's available to you.
Absolutely. Well, and again, having the vehicles in a sole proprietorship means that not only is the business liable for any actions or cause of effect that the car might create, but now personal assets are also going to be affected. So you're kind of throwing all the eggs into one basket by operating your business as a sole proprietor, having vehicles. Again, just a big no-no, if you will. You don't want to do it.
Interesting. So those of you who have not gone to our Millionaire Intensive and really understand how to live corporate life, grab the 2 tickets below. It's called the Millionaire Intensive. Currently in 2023, we do it every 3 weeks. As we move into 24, we're going to do it once a month. And make sure you understand how to do this. How do you live corporate life? How do you become a 3 to 5 year millionaire? How at 18 years old do you get your kids' companies and start doing these deductions, including Scott, why don't we speak to that a little bit? Kids get their vehicles at 16 years old. Should that be personal? Should that be a corporate? Should it be because the kid works for the company, they get one? Let's talk a little bit about to the parents on what some best strategies are for when the kids grow up. Because again, everything you do with wealth building, it's why we call it integrated wealth. You've got to have an integrated team and an integrated plan and solution. And most of you wing it every day and hope to God it's going to work itself out.
Yeah. So having kids that drive can definitely be high liability, right? So to address that, the vehicle should be owned personally. And then the kids should actually be on their own insurance policy to separate that out. Now, here's the cool thing is, if we want to make it a tax deduction to the business, if you employ your child, you can pay them up to, I believe they increased it to $13,000 per year, completely tax-free, which becomes a tax deduction to the business and is tax-free income to them. Now, if they use that money that's sitting in the account to cover the insurance and the vehicle payments, things like that, that's technically how we could write it off through the business, but it's not owned by the business. It's owned by the teenage driver, if you will. So there are some really cool strategies that we can employ. We just have to look at, everyone's specific situation.
Absolutely. So before we give you a bunch of gifts and how to sign up for some strategy sessions with Scott and his team, I want you to make sure you're subscribed to the channel if you haven't already. Click that notification button, be here 5 days a week, and share this with anyone who needs to understand deductions. Most of you who are only living as an employee and not living what we term as corporate life through LLCs, through S Corps, C Corps, limited partnerships. And by the way, Scott and our companies, we work both in the United States and Canada. So we can help answer any of these questions at any time. So make sure you subscribe, put any comments in the comment section below if you want us to add more content or talk about specific things. The other thing is go back again up to my search bar. We have tons and tons of video, hours, if not days, about living corporate life, tax deductions, tax strategies, and all this conversation that we're having. So Scott, last question and topic I really want to dig into before we give him a ton of gifts and how to sign up for a free strategy session is common misconceptions that are going on typically around the vehicle.
Common misconceptions around the vehicle.
CPAs just don't do it. And I wouldn't say most CPAs are too conservative unless you ask. They're going to be super conservative and you'll just pay personally.
Absolutely.
Mileage written off.
So yeah.
What's another one?
Well, that's really the biggest one is they're going to say, well, let's just take the mileage deduction on your Schedule C and, not put it into the business. So that is a big misconception. Some other misconceptions about car purchases are, the insurance might be too high, or can the company qualify for financing on the vehicle? There's a lot of different options out there. So don't get caught into, well, the company can't go get it. You can actually set it up in, there's certain strategies that we can employ to allow for it to happen.
So to get a strategy session, you're going to generationalwealthsystems.com/entity. So it's in the link below. Just go down below, click on it, and it'll take you to a page. You'll get some free gifts as well as get signed up with Scott and or one of his top strategists to talk through your situation, because everything's situational. And please do not go to one of those .coms where you don't get to talk to anybody and you're just clicking buttons, hoping you're clicking the right button, and you're going to end up with something, God knows what, and whether it's going to help you. So Scott, I appreciate you being here today. All of you, again, go to generationalwealthsystems.com/entity, get signed up for a strategy session. And at any time, anywhere, if you have any questions about money or business, go to askloral.com. We're there 24/7 to answer any questions or any requests that you may have. We'll talk to you tomorrow.